All right, let's get right into it. Today we're looking at the stock MSPR. And honestly, the data is telling two completely different stories at the exact same time. It's a real financial head-scratcher, a classic case of conflicting signals. So, is this thing a rocket ship or a sinking stone? We're going to break down the data and figure it out. First up, just look at this number. In one single day, MSPR shot up over 75%. I mean, wow, that is a massive, attention-grabbing surge. To put that in perspective, a lot of investors are thrilled to get a 10% gain in an entire year. An explosion like this makes you stop and ask, what in the world is going on here? But here's the other side of the coin. While that one-day gain looks incredible, you just have to zoom out a little bit, and the 3-month story is, well, it's a catastrophe. The stock has absolutely collapsed, from over $4 down to just 55 cents. So how can a stock be in a total freefall and, at the same time, have one of its best days ever? And that right there is our big question. Are we looking at a dead stock that's just having one final gasp of air? Or is this the very, very beginning of a spectacular turnaround? The clues are all in the data, so let's put on our detective hats and see what it's telling us. To really get to the bottom of this, we've got to look at both sides of the argument. And we're going to start with the bear case. All the evidence that points to a pretty grim long-term outlook for this stock. So, from the bear's point of view, it's actually pretty simple and powerful. Forget all that one-day excitement for a second. The big picture, the long-term trend for MSPR is pointing decisively down. Let's look at the proof. This table really gives us a great snapshot of the stock's normal price over time. You can think of these moving averages as a sort of baseline. Right now, the price is below its 20-day average, it's far below its 50-day, and just look at that 200-day average, over $8. This means the stock is trading at a tiny, tiny fraction of its long-term value, and for the bears, that is a massive red flag. And this chart right here, it shows us exactly where the stock is sitting in its yearly cycle. You see, it's not like it's recovering from a little dip. It's literally crawling along the bottom. The price is way, way closer to its 52-week low than its high. This just confirms that the downtrend isn't some recent thing. It's been a year-long story of decline. And finally, let's see what the cold, hard math has to say. A linear regression analysis basically finds the one straight line that best fits the overall direction of the price. And for MSPR, that line is pointing down. The source data itself calls this a bearish forecast, which suggests that statistically, the path of least resistance is even further down. Okay, so the long-term case looks pretty bleak, right? But that doesn't explain that 75% spike. So now let's flip the script and look at the other side of the argument, the bull case. What are the signals that maybe, just maybe, a rebound is happening? Now this is where things get really interesting. This number means the stock traded at nearly 9.5 times its normal daily volume. That's like a quiet little library suddenly turning into a packed rock concert. This massive surge in activity tells us a huge number of people are suddenly very, very interested in this stock. So to figure out where all that interest is going, we can use an indicator called the Money Flow Index, or MFI. The best way to think about it is like a detective for dollars. It doesn't just look at the price, it looks at price and volume together to see if money is flowing into the stock from buyers or out of it from sellers. And MSPR score is a staggering 93.99. Now, any score over 80 is usually considered overbought, which means there's been some intense buying pressure. This score is in the stratosphere. It confirms that the recent explosion in volume was driven by super aggressive buying, a classic short-term bullish signal. Let's dig into one more technical clue. The MACD indicator helps us see changes in a stock's momentum. You know, you can think of it like checking the speedometer in a car. It tells you not just where you are, but whether you're speeding up or slowing down. It can give us an early warning that a trend might be about to change direction. And this is a subtle but really important point. Even though the overall price is still way down, the MACD histogram has just barely ticked over into positive territory. This is what's known as a bullish divergence. It suggests that while the price is low, the underlying momentum is starting to shift in a positive direction. For the bulls, this is a potential glimmer of hope. Okay, so let's take a breath. We have a clear conflict here, right? A terrible long-term trend on one side, and this powerful speculative short-term surge on the other. So how on earth do we make sense of this? Let's bring it all together.
The best way to think about this is like a giant tug of war. The bears are on one side, pulling with the heavy anchor of that long-term downtrend. But the bulls are pulling back, and pulling back hard, with a sudden burst of energy. You've got massive volume, huge money inflows, and a high technical score. This conflict, this tug of war, is the core identity of this stock right now.
So what does this tug of war actually mean in the real world? Well, it leads us to the single most important characteristic of this stock. The one thing that explains everything we've just seen. And here it is, the crucial piece of context that ties this whole story together. MSPR is a penny stock. And by their very definition, these are low-priced, high-risk stocks that are famous for exactly this kind of wild behavior. These unpredictable price swings, they aren't some weird anomaly. For a stock like this, they are the main event. And this number gives us a perfect, concrete measure of that volatility. It's a metric that basically tells you how much the stock's price tends to bounce around on an average day. For MSPR, that number is almost 50%. That is an absolutely massive amount of risk and potential movement, and it's the direct result of that tug-of-war we were just talking about. So here's the big takeaway. The conflicting signals aren't a mistake in the data. They are the defining signature of what this stock is. You have a fundamentally weak long-term picture that attracts short-term speculators who are hoping to cash in on extreme volatility. The data isn't contradictory at all. It's actually painting a perfect portrait of a very high-risk asset. And all this leaves us with one final thought. We live in a world with more data than ever to analyze markets. But a stock like MSPR is a perfect reminder that sometimes cold, hard fundamentals can take a back seat to pure human speculation. It really makes you think about what forces truly move prices, especially out on the riskier edges of the market.